Hi guys, and welcome to another edition of Talking Finance. This week we've got Zeb and Arun from Gateway Bank back to have a chat about what's happening in your world. And obviously, for myself to say congratulations, I'm extremely jealous because you guys are actually free now to go to Bunnings and Office Works and Kmart apparently. Apparently Kmart
Yep.
was open yesterday at night, last night at midnight.
Oh, had I have known, I would have set my alarm clock to wake up at 12 o'clock and get to Kmart. But
Yeah.
there's plenty of time now, right?
Absolutely. Well, hopefully,
Yeah,
because you
true.
never know, right?
No,
So, so the important question is for both yourself, Zeb and everyone. Have you gone to a cafe this morning yet, or have you just been go 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 with work?
Not yet, but my wife has asked me to pick some of her stuff from the shopping mall.
Yep.
So I'll
wow.
probably go in my afternoon break and get it for her because she's been super excited the shops are open finally.
Zeb,
Yeah,
what about
Dien,
you?
you'd be proud of me, mate. I was first client in. I actually am blessed in living atop a coffee shop.
Yep.
So I
Oh,
can hear
yes.
when they open the front doors. And I was
You
like,
can
well,
hear it.
there we go. So, yeah, took one of the kids down there, and we were first jumbo cappuccino and first baby chino out the door this morning.
How
Nice.
good is
But
that?
did you
That's
did
awesome.
you did you actually stay and enjoy, or did you do a takeaway? That's the question. That's the key.
I lingered. I
Yeah.
lingered a little bit. I didn't sit down at the table, but
Mhm.
I certainly took a great deal of joy in not having to kind of scurry away afterwards, kind of thing, which was really really nice.
I think that's the thing I miss the most, which is the morning coffee. You go and then you actually read the newspaper. That's
Yeah.
just sort of my calm, my during the day or before the day starts. But hey, I'll be waiting for that. Hopefully, we can be like you guys in about a month's time. I think. Um,
Fingers crossed.
yeah. Now let's get to the real talk because I understand that you guys have done a bit of research in terms of the broker customer journey and the shares. Is that correct? And you've got some findings on that.
That's correct, Deanne. So we did some research with some new and existing brokers and gathered that we need to turn up the volume on key niches and policy to attract that first time use.
Mhm.
In the initial stages, where a broker is trying to understand their client, brokers quickly turn to their favorites or recommend a bank with strong brand recognition or a bank that suits the client because of a certain policy, niche, or offering from that bank. It's totally understandable. And in our case, a lot of our accredited brokers turn to us because they know that we are panelists for the first home loan deposit scheme, or that we offer alternate options such as family pledge, monthly LMI, and green offerings as well.
No, that's awesome. So let's go back on that one then, because obviously, you said that the family pledge is there as one of your major points, right? So
Yep.
can you tell me a bit more about that? Is where brokers should be more aware of what you guys are doing there?
Sure. Not all first home buyers are eligible for the government scheme, so it's great we have alternative options like the family pledge to help brokers. Family pledge is becoming increasingly popular as it's another way family can help in the home buying process without pulling together a hefty cash gift. So, how it works in a simple fashion is that the guarantor or the family member can use the equity in the property they own as a security guarantee for the home loan. The guarantor does not need to give us any money, but will need to accept the commitments associated with entering into the family pledge loan. So basically, we don't require the guarantors to demonstrate servicing. However, we need to understand their financial situation, things like the assets and liabilities in particular, because we don't want the guarantors to face any undue hardship because of them entering into the contract of helping the kids or family.
So just to clarify that,
Yes.
the servicing side, so the guarantor doesn't even need to show servicing that they can service the amount that they're gifting. I suppose gifting is probably the wrong word, but guaranteeing to the first homeowner. Is that correct?
Yes, we don't require them to demonstrate servicing. However, credit would want to see, their assets and liabilities position. to confirm, what they've got in terms of assets. So that is the most important part, because that has to do with financial hardship. Because if someone is not strong on the asset side of things and they've got just the property on their own, we have to be very careful, and especially if it's a principal place of residence. So we have to be really careful with these scenarios. Yes.
Yeah, and what I'm feeling with regards to the Finance and Coffee community as well, in terms of the scenarios and comments and the shout outs that we've had with you guys, is that your credit team actually talks to the broker to work these things out. Is that correct? So no, you're not just giving a call application, then hoping for the best, and then not having a recourse to that. So that's pretty cool there. Could I just touch on with regards to obviously refinances, right? So refinances is a massive thing throughout 2021, especially in New South Wales and Victoria. I mean, especially so in Victoria, actually, because purchases have basically, I won't say dropped off the cliff, but because it's harder to go, you can't go and inspect the property, you're less likely to buy. So refinance is a good thing. You guys have entered the cashback for refinances. Is that correct?
So yeah, we have entered the cashback space for refinance. So we're offering a $2,000 cashback for our green and green plus home loans. And why that's important to note is that that's core and aligned to our purpose still. So the reason we wanted to get into that space is obviously, I think previously we'd spoken about, ensuring that it didn't cost the end client more to do the right thing and make an environmentally conscious decision. And so in a way, we're kind of subsidizing that decision as well in lieu of the current environment. So there's cashback everywhere. We see it, there's, 20 something, 30 lenders now in the cashback space. And we didn't want those clients that wanted to make an environmentally conscious decision have to pay more or miss out on that opportunity, I think is the key to it. So for us, that's absolutely critical. And I think, Arun can talk to some of the other things we're doing in the refinance space to probably not just make it better for the client, but from a refinance perspective, make it better and easier for the broker as well, kind of thing, because there's such a key part in the transaction. So I'd probably invite Arun to talk through what we're doing in that space.
So yeah, I believe in the refinance space, correct me if I'm wrong, not only are you getting the the statements for the home loan, most banks are requiring everything else, including the kitchen sink, which in some ways is good, but in some ways it slows down the process. So what are you guys doing sort of differently?
Sure. We absolutely understand, Dien, that there are far too many product policy and changes for brokers keep up with, right? And we hear our brokers' feedback regarding engagement and interaction, which is one of the reasons we are sitting here today, right? One of our recent changes we'd like to acknowledge is our simplified documentation process for refinances. This is one of the ways we at Gateway are supporting brokers and their clients in such a heavily led refinance market. We understand people want to move around and get a better deal that basically suits their ongoing information, right? So, the new process basically allows for refinance applications to be submitted without extra transaction account statements and living expenses verification requirements.
Yeah, I think that goes towards like other lenders having, I suppose you can call it, direct access to a transactional account, and then going, what's this, what's that, what's this?
So, but there are conditions with this process, such as the refinance amount must be no more than the limit or the scheduled balances of the existing facilities, plus refinancing cost, a maximum of $5,000.
I was going to go back on that, because obviously I think
sure.
what you guys are doing is pretty cool, simply because during lockdown, I'm not sure about you guys, but my wife, I'll blame my wife, she's just spending a lot of money on things we don't need, right? And we're I'm getting a knock on the door probably every 2 hours because there's a new parcel coming aboard, and if I'm understanding this correctly, you guys don't need the transactional savings just as long as that the repayment for the home loan is in order and that customers you guys have verified their income. Is that correct in a nutshell?
Yeah, it's so that's exactly right, Dien. So less focus on the transactional nature and more focus on the loan side of things, because that's probably, I guess, most important kind of thing. So what we want to do is increase the emphasis in our assessment on the character of the person. So if you've got a home loan and you paid your home loan, you're probably going to continue to pay your home loan. It's that kind of simple. So that's the approach we're trying to take, is less focus on, you know, the last year or so kind of thing, smashing Amazon purchases every 2 days kind of thing, and more a focus on, whilst that's been happening, you've still managed to service your home loan. And that's the important shift for us. So hopefully it makes life a lot easier, makes things a little bit smoother for our broker partners, and also it'll probably, well, it will most definitely speed up the process for us in, you know, moving towards a conditional or a formal approval as well, which is all good outcomes. And it's just a much more balanced approach, I think.
Yeah, absolutely. Because I think, like I said, my wife spends a lot, but, you know, we also return a lot of stuff that, you know, normally we don't do. And the returns, the refunds takes, you know, a month, if not more, to actually get processed properly into the accounts. I think, especially with you guys in New South Wales, the fact that you're going to be more free now, you realistically, I think you're going to be spending less money buying crap online and returning it. So, but anyway, that's just a guess, right?
We can hope.
Yeah, absolutely. Well, Halloween is coming, so, you know, as we go to record, so I am actually looking on eBay for some costumes there. So there'll be lots of purchases and lots of returns, I believe, until we've settled on what we want to do. So let's see. Okay, so let's, if you don't mind, if I can move across the next subject, because it is, you know, we're sitting in October. It is in the media the last couple of weeks now. Unless you're sitting under the rock, you're not aware of it, which is the fact that the government is going to ask lenders, especially deposit-taking institutions, to actually consider, or actually move, not consider, but move your buffering in terms of serviceability for customers. How do you guys see that? And obviously, will you guys be doing it? I think that's a rhetorical question. You will be doing it. But how do you see that impacting your flows, if any?
So it's a really interesting question, and it's certainly top of mind for everybody. So yes, we will most definitely be doing it, as will every other ADI out there. Come the end of October, it'll be in place. For us, when we think about the nature of the business and where a lot of our stuff comes from, kind of thing, you know, we're quite strong on, you know, first home buyers, that kind of space. And what that means is that there's a lot of, well, it's a very competitive market. So the interest rates in that space, you know, you're looking at 2-year and 3-year fixed rates that are, you know, 2.04 or even below with other lenders as well. You know, if you apply a buffer to that rate of 3%, then you're moving to an assessment rate of 504. Right. Our floor rate at the moment is 5%. So we're actually talking about 0.04 difference. So from a borrowing capacity perspective in that space, it won't make too much of an impact. But I think where you've got other loan types and purposes, for example, investment, which is traditionally priced a little bit higher, there may be some limitations in that space, because if you start at 2.4 or 2.5 kind of thing and add 3, then you're now at an assessment rate of 5.5, and that will take a bite out of the market, I think. But I will say that, you know, the assessment rate, as opposed to you know, debt to income and things like that, is probably a little bit more specific and tailored and less broad brushstroke. So I think if there was going to be something implemented to attempt to cool, then, you know, that's probably the right first step, as opposed to something that would be much more dramatic in its impact. And let's wait and see what happens from there, kind of thing.
It's interesting you say that about the floor buffering for the investment loans, simply because I think the idea would be to slow down investment loans. theoretically. But I think the data shows that the last 12 months, unoccupied loans have got are pretty high, right? So let's see how it works. So
yeah, it'll be really interesting. But there is certainly a lot of still first home buyer, owner occupied. There's plenty of that business still around, kind of thing. So it will be interesting for those. I think as well those ADI lenders. It'll be really interesting for us.
Yeah. Okay, so let's take a step back again with what you guys are, I suppose you call it, are trying to lead the way with, which is your green loans. How obviously your green loans, and you're trying to entice people with the cashbacks there, and then on top of that, you got your first home deposit schemes as well. How's that tracking for you guys? And how can we push the message better with the community to understand that? Because obviously when there is almost, and there is still basically 1 or 2 questions a week who has fields, right? So do you guys sort of go, hey, we do, basically? But it's sort of frustrating that that they look at the big fours rather than smaller banks like yourselves.
And with us, green loans being new in the space, yes, we're still fresh in the market. But having said that, we are quite different in regards to the niche that we're offering, right? The intent is to basically reward those clients who have got the purpose and who are making those arrangements to build an environmental friendly house, right? And that's what Gateway is about, the Pocket and Planet niche that we have. And we wanted to be aligned with our Pocket and Planet purpose and exclusively offer this cash back to applicants who have made this commitment. So it's basically available to purchases, construction, and refinances with a maximum LVR of 80% at this stage. And it's a simple product offering, right? We've got 2 products. We've got Green Plus and we've got Green Home Loans, right? So the Green Plus is basically an energy efficient home with a 7-star net HERS rating, or a 7-star residential efficiency scorecard rating, which allows customers to be on a rate of 2.34%, right? So even if it's a construction loan, I just like to add it here. Standard construction loan that we offer is 3.23 interest only, right? But someone who's got that Green Plus home loan would be on 2.34 interest only, and you can see the difference. That's the reward that clientele will be getting by coming to Gateway.
Yeah, that's pretty awesome. And also your turnaround time is still pretty awesome, I believe. Is that correct?
2 business days, and Credit has done a fantastic job over the last few months with assessing deals right on time. And I think that's where we stand pride and tall in the market with the niche that we have, and we have kept it at 2 days for a very long time.
We feel there's good value for our broker partners. So, that 2 days provides a time frame for an assessed conditional approval that's going to give them the comfort, and 2 days is worth waiting for, as opposed to your system approval, which is 2 seconds, but actually you could get scuttled at the 11th hour down the line, kind of thing, from a process perspective. So we will, wherever possible, endeavour to keep it at 2 days, and if ever we find ourselves outside of 2 days, then we'll be making moves to bring it back to 2 days, because that's where we feel the value is for our partners.
Yeah. So what about pre-approvals? Do you guys do a fully assessed pre-approval?
Fully assessed pre-approval, 2 days.
That's pretty awesome, eh? And I'll say that right now, because a lot of banks are moving towards the whole system approve. And you're in New South Wales, I'm in Victoria. Traditionally, our markets are auctions. You can't go with how do I put it, a half-assed approval.
No, it's a big gamble to go there, and my heart goes out to every broker and every lender that's customer fronts up to them with, hey, I've paid a deposit and here's the contract, kind of thing. Like we know what that feels like, and we know how that kind of shakes out, and it's a rough journey for everybody. So wherever possible, we look to support it, absolutely. And someone's got an auction to go to on the weekend, then let's get them some real peace of mind before they go and throw some money around.
Yeah, because it's once you pay the deposit down at an auction, there's no going back. Hey,
It's a hard one to unwind.
no. So okay, so with that, and I think this is pretty valid too. There is no need for the broker to send a special email to your BDM team going, "Hey, can you please? This is going to be a fully assessed. This is a pre-approval. It's just quick
That's how
pre-approval,
we
and
do
it
it.
goes through the whole screen." That's awesome.
Oh, yes. So, I mean, there were a few things that we found out, right? And things like, will the deal go right? Does the lender have minimal document requirements? Is the BDM accessible? What are the lender's SLAs? As much as this is a crucial phase for brokers, Dien, it is crucial for us too as well, right? We have a small dedicated team on board available to help new and existing brokers with scenarios along the way. We also know how important it is to get a quick turnaround, as Zeb mentioned. So we work hard to keep our SLAs consistently low, currently at 2 days, which was also recently recognized in Connective's top 10 ranking for fastest time to unconditional approval.
That's
So,
awesome.
yeah, I mean, and that's the whole purpose of Gateway at the moment. Help our brokers, help our clients, and make sure that we're turning things on time for them, especially the ones, as you mentioned, with auctions and stuff. Where they can't go back, and they've put the deposit on. It's a big commitment emotionally and financially. So.
Absolutely, and we talk about first touch usually with regards to conditional. We don't talk about unconditional, do we? So that's a massive effort as well.
Yeah.
Thank you.
And I think the other point is around some of our research was, shining a light on some of those things that we knew already, but probably giving them a little bit more amplification as well, which was kind of like the risk and the tension that a broker finds themselves under as they're moving through the transaction. So, they submit their application to a lender and then they wait, kind of thing, and they've got their customer in the background waiting as well. And then, how critical the individual deal is to that broker. So for us as a lender, a day here or a day there can really make such a significant difference. And also just how much tension that broker feels, because they've got their customer they're trying to manage the expectations of. They're trying to deal with us, and it's not their only deal that they've got on their plate, kind of thing. And I think it was really important for us to call that piece out, and just the risk to that individual broker with just one deal, because if it goes wrong, the impact of what that can actually mean from referral sources and things like that as well. Like, it's not just that application that's on our assessor's desk, kind of thing, is much broader than that and much more impacting than the individual transaction. And I think it's really important for us as an organization to acknowledge that, and for all lenders to acknowledge the fact that it's not just that one. It's a whole book of deals. It's a whole book of potential referrals for that broker, and we potentially are could cause an impact to that and their success moving forward. And we can also prove to be a critical winning factor in that. So we do well, that feeds back to their client, and then more referrals, and they've got a greater level of trust with us as the organization. And I think that's a really important thing for us, is that trust and how critical that is, kind of thing. Like, not just saying you'll do it, but do it, and committing to it, picking up the phone in a couple of hours, not the next day. That kind of stuff all makes a difference for that broker, managing that expectation. And that's kind of simple, but just hearing it again and again, kind of thing, from these guys for our research, it's just really powerful stuff for us to go back into the business and go, this is why it matters. We've been telling you it matters. Now you can actually hear it from the brokers themselves. It matters. We can't mess this stuff up. And it's been really, really insightful from that perspective.
I think what you said there is also very insightful and very I don't know what the term for it is, right? But usually most banks look at a broker and get concerned and get angry that the broker doesn't know everything about them, and don't expect brokers. Well, they don't actually have a second thought that the broker also deals with other banks, whereas your survey actually takes that into account, and then you're using that right now to have an overall worldview, should I say, for the broker, that the compassion some banks are asking for should be actually be applied to the brokers. Whereas it's bizarre that a bank's asking for, we should have, brokers should have compassion for us because our turnaround times are, blown to bits or whatever. What about compassion for the broker is what I'm going to get at.
Yeah, it's a relationship. It's got to be reciprocal, right? Otherwise, what kind of a relationship is that?
Absolutely. And that's why it's called a relationship, because otherwise it's just, they call it, it's just business, and it's more of a me. And I don't think this is how it's going to work. So at 60% market share, like or not, brokers are here to stay. But then it just comes down to, which lenders actually respect the broker and wants to pay the broker. And that's what you guys are doing.
Yeah, absolutely. We couldn't do it without them. There's no question. We want them to be around for the long term. I think the final thing I touched on is with, our green loans and green plus loans, like the purpose for these things is not just, solar panel. It can be any number of things to improve the footprint of the property and those customers and those families kind of thing. So, it's water tanks, it's solar, it's double glazed glass, it's all of those kind of things that, make a difference kind of thing. And I think we need to do a better job of calling it out, because not everybody can do solar kind of thing, or not everyone, that's not available to everybody, but there are other things that are available to them, water tanks, things like that might be more relevant or appropriate for their property. And I think we should celebrate those as well, because they're trying to do the right thing. And that's what this is about.
Absolutely. I mean, it's just, I think we said it last time. There was a report about the imminent dangers of the environment. No one's really giving too much thought about that. When we still see stuff in the media about, a solar pack for your home that basically takes 5 to 10 years to pay back. But I'll be honest, I bought a home that's already got solar, and I make $40 a month from my electricity provider, and I'm just blown away. I mean, this is especially through winter here. All right. Yeah. So I'm absolutely blown away, and it's one of those things where my wife said, "See, told you," and it's we'll wish we had more banks sort of going the way you are, which is enticing people to save the planet. Like a better word, that's it, to save the planet, because not a lot of businesses are looking at doing that or enticing. They say it, but they're not doing anything to entice their own customers to do the same thing. Zeb, Arun, as always, thank you so much for joining me today. And hopefully we can actually have a chat in the new year, or at least before the end of the year, and see how things are going. Because I think as you guys are opening up, things will get interesting. We are going to be looking very closely at what you guys are doing and how you guys have done it. I think even before opening up, how you guys have done it is brilliant, because your case numbers went down, ours went up. I just don't get it, right? I look at it and I'm scratching my head, because we've had a harder lockdown than you across this, the metropolitan area. But yeah, our numbers are up. But anyway, that's another chat for another day, yeah.
We'll all be there, but I think at the end of the day, it's not just the cases, it's the hospitalizations and the further impacts that we've got to keep a look on, kind of thing. So fingers crossed, mate. We'll be there, and we'll have a cup of coffee together, face to face, and gosh, it'll be good.
Hopefully we can do that before Christmas. So let's see. I'm aiming for that, because I'm pretty sure I can't go overseas, but I think I can go to New South Wales. So let's see.
There we go.
Arun, Zeb, thank you so much, mate.
No worries.
All right, thanks very much, Dien.
Thank you so much.
Bye.
Thank you. Bye.